Welcome back to the Stocks Updated. Today, I want to dive into a topic that's been generating a lot of buzz recently, Lucid Motors. Specifically, we're going to discuss its status as a penny stock, address some of the misconceptions surrounding that label, and explore the concerns about bankruptcy that have been making the rounds. There's a lot to unpack, so let's get into it. Let's start with the basics. Lucid's stock price currently sits at around $3 and some change. By definition, this places it firmly in the category of a penny stock. For those unfamiliar, any stock trading below $5 is generally considered a penny stock. While this term often carries a negative connotation, let's break down what it really means and whether it's something investors should worry about. One of the common arguments floating around is that institutions don't buy penny stocks, which is why Lucid isn't seeing significant institutional investment. But is that claim accurate? Not entirely. Yes, it's true that certain types of entities are restricted from purchasing penny stocks. For example, trusts such as teacher trusts and other similar entities are often barred from investing in stocks under $5. Additionally, stocks traded on margin cannot be bought if they fall into the penny stock category. However, these restrictions don't apply universally. Many institutional investors are still able to buy penny stocks, provided they use actual cash rather than margin. This means that the argument about institutions avoiding Lucid simply because of its price point isn't entirely valid. Now, let's look at the data to better understand institutional involvement in Lucid. As of the latest reports, 134 ETFs currently hold Lucid stock. That's no small number, and it equates to approximately 153.28 million shares held by US-based ETFs alone. Beyond that, when analyzing the most recent 13F filings, we see a notable trend. Institutions are increasing their positions in Lucid rather than selling out. This is a clear indicator that many institutional investors still see potential in Lucid, despite its penny stock status. It's also worth noting that institutions that are prohibited from holding penny stocks would have exited their positions long ago. For context, the last time Lucid traded above $5 was back in October 2023. This means any entities restricted from owning penny stocks likely sold their shares during the fourth quarter of 2023 or the first quarter of 2024. By now, their absence is already reflected in the market, so there's no reason to panic about institutional sell-offs. Another common concern I've come across in comments and discussions is the idea that Lucid is on the verge of bankruptcy. Some individuals point to the company's cash burn rate and claim that it's only a matter of time before Lucid runs out of money. But let's take a closer look at this claim. First, it's important to acknowledge that Lucid does have substantial backing, most notably from the public investment fund PIF of Saudi Arabia. This financial support provides Lucid with a safety net that many other companies in the EV sector lack. The PIF has a vested interest in Lucid's success and has shown a willingness to provide additional funding when needed. Moreover, companies have several tools at their disposal to avoid bankruptcy, even in challenging times. For instance, Lucid could execute a reverse stock split to boost its stock price and regain compliance with listing requirements. It could also raise its authorized share count to bring in additional capital. These strategies have been employed by numerous companies in the EV space and beyond, allowing them to stay afloat and continue operations. The bottom line is this: while Lucid is undoubtedly burning through cash, the notion that bankruptcy is imminent is an oversimplification. If things were to take a drastic turn for the worse, there are still many steps the company could take before bankruptcy becomes a realistic concern. Let's shift gears and look at the broader context. The EV market is highly competitive, and challenges are par for the course. Lucid is still a relatively young company in this space, and growing pains are to be expected. However, the fact that Lucid is often the target of such intense scrutiny is actually a testament to the attention it commands. Being labeled a penny stock doesn't diminish Lucid's potential or the quality of its products. Many successful companies have gone through similar phases, only to emerge stronger on the other side. What matters most is the company's ability to execute its vision, adapt to changing market conditions, and manage its finances effectively. Now, let's talk about the online trolls. It's no secret that social media platforms and comment sections are rife with negativity, particularly when it comes to stocks like Lucid. Words like bankruptcy and failure are thrown around casually, often without any real understanding of the underlying factors. It's easy for someone to glance at Lucid's financials, see the cash burn rate, and jump to conclusions. But investing requires a deeper understanding of the market and the companies involved. Rather than succumbing to fear-mongering, it's important to look at the data, consider the long-term prospects, and make informed decisions. As we've discussed, being a penny stock isn't a death sentence for Lucid. In fact, many companies have thrived despite being labeled as such. The key takeaway here is that penny stock status is a reflection of price, not potential. Lucid continues to innovate and expand its footprint in the EV market. Its vehicles are widely regarded as some of the most advanced and luxurious electric cars on the market, and the company has made significant strides in areas like battery technology and production capacity. Additionally, the backing of the PIF gives Lucid a level of stability that many of its competitors lack. This support allows the company to weather short-term challenges and focus on long-term growth. So, where does Lucid go from here? In the short term, the stock may continue to face volatility, as is common with penny stocks. However, the long-term outlook remains promising, provided the company can execute its strategy and manage its resources effectively. For investors, the key is to stay informed and keep a level head. Don't let the noise distract you from the bigger picture. Instead, focus on the fundamentals and the company's progress toward its goals. To wrap things up, let's recap the main points. Yes, Lucid is currently a penny stock, but that doesn't mean institutions are avoiding it entirely. Many institutional investors continue to hold and even increase their positions in Lucid. The fears of bankruptcy are largely overblown. While Lucid does face challenges, it has the resources and support to navigate them. Being a penny stock isn't inherently negative. It's simply a reflection of the current stock price, not the company's potential. I hope this video provided some clarity and addressed some of the misconceptions surrounding Lucid. If you found this discussion helpful, please hit the thumbs up button and subscribe to the channel for more insights. Let me know your thoughts in the comments below. Do you think Lucid is on the right track? Are you concerned about its penny stock status? I'd love to hear your perspective.